and a very happy new year to all of you. You're watching Property Hotline with me, Kavita Krishnan, on India's first property business channel, Magicbricks Now. So if you plan to buy a home this new year, you definitely need to get your finance sorted, and that's precisely what we'll be doing today. Today we'll be answering questions related to home finance. Joining me in the studio for this is our expert for the day, Harsh Roongta. Now Harsh is a Sebi registered investment advisor. He's also a personal finance expert. Harsh, very, very happy new year to you and welcome to the show.
I wish you and all the viewers of the channel a great 2016.
Let's get started then with the first question for the year. We have our first call of 2016 on the line. Hello?
Hello.
Happy New Year, Anil. Tell us what's your question today.
Yeah, Happy New Year to the entire team and to the guest panel. My question is on financing for a redevelopment project. Actually, I am owner of a property in Ghatkopar West, and this is an old property with a lot of pagdi tenants. So as we all are aware, the Rent Control Act is in favor of a lot of tenants, and I am not in a position to obviously vacate their premises. Now, if I have to take a loan to redevelop it myself with the help of professional architects, I just want to know what is the procedure, because with the kind of rents I get, it's not even $3,000 for a total of 19 to 20 tenants. So, and the building is in a really bad condition. I've already given my letter to the municipal authorities that this is an endangered building and they have done their audit and everything. But if I want to...
Okay, so you essentially want to go in for self-redevelopment.
Yeah, I want to go in for self-redevelopment. I want to understand what's the procedure. Can I mortgage the same plot and get a loan? Because I obviously don't have more resources to really take loans.
So Harsh, we have heard of one bank, I believe the Mumbai District Cooperative Bank or something, that actually finances self-redevelopment projects. What are the options that that Anil has available?
So Anil, what kind of financing, what amount of financing were you looking at?
So I have been speaking to few developers who have not come forward to redevelop it, but I understand that the project cost is about 5 to 6 crore minimum.
Okay.
To get a basic building, put this down and bring it up. And obviously no tenant is going to chip in monies on this. And I don't have financial capability to kind of self-fund myself without a loan.
I get that. So I think, Anil, clearly this is not a regular loan against property or anything. This is clearly, as you have yourself mentioned, this is a loan for getting a redevelopment done. And that's not very, very easy to get. Even for well-established developers, they don't find it that easy to get a loan for redevelopment. Typically, any funding that you would have on this would come to you after all your tenants, for example, have agreed and all the approvals are in place. And of course, your next question is going to be that you need money to do all this. So it's a classic catch-22 situation that you don't have the money to get all these approvals and getting the tenants to vacate, and till they do that, you can't get the money. So the only possible way out is, there are 2 or 3 possible ways out. One, of course, is that you get a loan against another property. That is, if you have some other property or some other kind of asset.
Use that as collateral.
Use that as a collateral. So that could be one option for you, Anil. The second option is what you are already exploring. Get in a party which can put in its own money, which is essentially developers. This is a classic thing that developers do. They are the ones who come in early. Even if you were to seek investments from the new instruments that are there, the real estate investment trusts, or there are a host of private equity funds that are active in real estate, all of them would not come in at this stage. They would all come in again only post getting on the approvals and getting the tenants to vacate. So I think your only option really is to get a developer interested or provide collateral security, some other collateral security.
Right. So clearly, Anil, it's going to be very difficult for you to get banks to lend because they will only lend when they see some construction happening. However, there are the options that, Harsh just told you. The other thing that you can also do is, Harsh, do you think it makes sense for him to speak to project management consultants who actually deal with such projects and who can, show him the way forward? There are probably instruments out there that we haven't.
Could be. I
they
mean,
could probably
it's
help him
always
tie
best to
up
case the
finances with
market.
somebody, yeah.
You should definitely case the market. But I would think it would be pretty difficult to get a loan at the stage at which you say your project is.
Right, so you will have to look for some other source, get in a developer investor or get some private investor who's willing to put in some money, or else try talking to these project management consultants. They might be able to help you with arranging for finances at this early stage of the project, because this is a stage where banks typically do not want to get in, right? Thank you, Anil, for calling in. Let's move on. We have another question that's come in via email. Now, Divya Gopinath has written in. She is planning to reconstruct her home, wants to take a loan of 60,000 rupees. She wants to know how this will work out for her. So, does she get finance for reconstructing?
Yes, you do get finance for reconstruction. I mean, I presume that there is some small place somewhere she wants to demolish it and build it again. I think the thing here is the amount of loan. 60,000 rupees is a very, very small amount. Most banks would have a certain minimum. Even the smaller banks would have a minimum that's
This sounds more like repairs to me rather than reconstruction.
It sounds like repairs.
Like 60,000?
60,000 is a small sum of money. I think this is best done. Not that it is the cheapest, but it is best done by taking some kind of a personal loan. If she takes it unsecured, depending on where she is working, the rate would range from 13-14% to maybe 18-20%. But if she is willing to give security, some other because giving security of your land or the building for 60,000 rupees is very painful. So maybe she can give some other security like a saving certificate or a bond or a life insurance policy with a high surrender value. That should give her a loan at 12%, 11-12%.
Would you suggest that she goes for a personal loan if she wants to take it from a bank?
It would be quicker. It won't be the cheapest, but at 60,000 rupees, the absolute value of the difference in interest won't be very high.
Because if she were to raise it privately, like you said, that would also come at 12-14%, and a personal loan.
It would come at 12-14% if she gives security or if she is working in some top-notch corporate. So, I mean, unless that is true, it would come more expensive.
Right, so those are your options. Divya, take a loan from the place where you work, from your workplace. You would get a salary advance very easily, and you would get it typically at 12-14%. Or else, look at raising a personal loan. Do not look to pledge your property for a 60,000 rupee loan. It doesn't really make sense. It doesn't make economic sense to do that, right? Let's move on. We have a caller on the line. I'm told Manoj has called in with a question. Manoj?
Hey, hi, sir. Hi, ma'am. How are you?
Hi.
Hi, I'm fine. Happy New Year to you, Manoj. Tell us what's your question.
Wish you the same. I have a question that I stay in Balad, western suburbs of Mumbai. So I need to invest around 35 lakh rupees in a flat. Okay, if it is near my vicinity, it would be ideally a Mahara setup or not even a one-room kitchen. So just need to ask if I am entitled for a Mahara this thing. The building is already, the building's already there. It's in Malavani, Ekta Nagar.
Okay. So you want to buy a flat in a Mahara building?
Yes.
Right. Okay. And how old is this building?
Sorry?
How old is the Mahara building? Because Mahara does have a lock-in. They are not legally allowed to sell the flat for around 5 years, I believe.
Could be.
This building is around 2 to 3 years. And I also wanted to know if I can opt for a home loan, if I am eligible to buy this flat in a building which is 2 to 3 years old.
Okay. Is he eligible to buy a flat in a building that is 2 to 3 years old, a Mahara building? Can he get a home loan for that?
So I think that will depend. If there is a lock-in, not every Mahara building has a lock-in. When the Mahara buildings that have been sold on commercial rates, there is no lock-in. So I mean, assuming that the seller is allowed to sell, then obviously you will be able to get a loan like any other building. It would be subject to evaluation. There is an additional issue that you have mentioned about the flat area being about 300 to 350 square feet. So Typically, most banks require that it be minimum 300 square feet, but that I think is being met. If MHADA has not already made conveyance to the cooperative housing society, then you will need a MHADA NOC. It is available. MHADA does issue NOCs in a specific format. So I think getting a loan really depends on your income and your payment track record. And the other issue is that it will obviously require an NOC from MHADA if they have not already conveyed the property to a society. But getting the loan should not be a problem.
Right, no problems there for you to actually get a loan. Let's move on. We have another query that's come in on email. Ajay Taneja has written in. He says that he works at an IT company with a package of 5 lakh rupees per annum. His hometown is Lucknow. He wants to know if he can get a loan to buy a plot from the Lucknow Development Authority and the Awas Vikas Parishad. If yes, how much loan can he get? Harsh, I should think that if you're buying from the government, banks should be more willing to lend to you.
So plot loans are different from home loans. I mean, plot loans typically are far more restrictive. First of all, not every home loan lender lends for plots. The bigger ones do, but not every lender does it. One. Two, typically the tenure tends to be much shorter than a home loan. A plot loan is available for 7 to 15 years versus the 20 to 30 years that you can get a home loan for. Typically, a plot loan tends to be more expensive, maybe a percentage or percentage and a half more expensive. Fourth, plot loans are typically available only if they are bought from the government, or government designated authorities. So he is talking of a statutory authority. So plot loan should be available if he buys it from the statutory authority. Typically, based on his salary, if we assume say 60-65% of the value of the plot is given as a loan, he can assuming an EMI for 10 years.
Okay, hold on there. You said 60 to 65%. So when I'm buying a home, I can get up to 80% of the value. So for land, I'll get about 60 to 65%. That's a loan to value
You do
ratio?
get less. I did mention that it is more restrictive. Also, you get it for a lower period. So assuming a 10-year loan, assuming an interest rate of 10.5%, okay, EMI is roughly about 1,350.
Okay.
Okay. Based on his salary, he'll typically get a loan of about 12 lakhs. If provided the plot is valued at least about 20 lakhs, roughly.
Okay.
18, 19, 20 lakhs.
So the maximum loan that he can get is around 12 lakhs if your plot is valued at 20 lakhs. But yes, like you said, he's not looking for a very... is he saying that? No, he's not saying exactly how much he wants. But like Harsh told you, a 12 lakh loan is what you are eligible for. Yes, you can get a loan for buying land, and since you're buying land from the government. But like Harsh also said, be very clear that you'll get up to 65% of the value of the land as loan. You'll get a loan with a much shorter tenure and a much more expensive.
And another thing, no tax deductions available on this repayment of this loan.
Right, so no tax deductions there. Okay, let's move on. But Harsh, if he were to build a house on it, he would get a tax deduction?
Absolutely. Afterwards, he will get. Once he builds a house on it, he will get.
Right, so build a house, you'll get the tax deduction there. Okay, let's move on. We've got another email query coming in. Tejinder Singh writes in, he says he needs a home loan in 1 to 2 months. But he has a low CIBIL score. His score is around 652. This is due to an outstanding credit card bill. He had shifted to another location. His mobile number had changed. The bank couldn't contact him. He hasn't used the card either for 18 months. Post the issue, has paid the entire amount. The bank has also issued a no due letter. Now he wants to know how can he improve his score and how can he avail a loan from a bank. So once he's cleared the dues, can he improve the score?
So extremely interesting question that Mr. Tejinder Singh has raised. Till some time back, if you defaulted, whether it was your fault, whether it was pure logistics like it is in his case, once you defaulted, your ability to get a loan in the future suffered forever, even after you paid it off. Because see, the credit report will contain both the things, the fact that you defaulted for 18 months and the fact that you finally settled off everything. So it will have both. That used to tend to scare off all lenders. But now I think over time, lenders have become much more, much sharper And therefore, in issues like this, and his score is not all that bad. 652 definitely not a very bad score.
What's a good score? What's a good
750 is a score that scores, I mean, if you have 750, typically that would mean that you don't really have any serious defaults on your, and you have some good repayment track record. It would mean both the things.
Okay.
At 652, obviously, I think this credit card default, which seems to be of reasonably recent origin, is weighing on his score. But he could not have had 652 despite the default if he did not have some other good repayment. So there is obviously some good repayment also that he has done. So clearly he will be able to get a loan. Only thing is, this will have to go off in the manual process where there will be the credit officer who will really sit down and understand the fact that this was a administrative default.
No,
And
so
that
he's got this no due letter. Can he take this no due letter to the credit
that is
bureau?
yes, of course he should take it. But I think the first thing that he should do is not completely depend on just this no dues letter. Please, I would ask him, please take your credit report again. See how the bank has reported the payment of the credit card dues. It is extremely important that it should have been reported in the manner in which it has been agreed. So, because if they report as written off, then it would have a problem. If he has paid off fully, there is no reason for them to write it off. So, the idea is what they report back is very important. Do that before you start applying. Get your report, and if it is not reported properly, complain to the bank and complain to the credit bureau so that it will get rectified. After that, apply.
But then, like he said, he wants to take a loan in 1 or 2 months. That is possible.
It is very much possible. If this is the only thing, he might get it a little more expensive. Maybe instead of the 9.5 to 9.6, which is the current rate, he might actually get it at say 10, which is possible. He might have to go to the smaller housing finance companies. etc. But he will definitely get a loan.
Right. So Tejinder, the first thing that you need to do is go and get your credit report again and see what the bank has reported back, and then you need to actually go to the credit bureau with your no due letter and get that to reflect in your credit score. But yes, you can get a loan within 1 to 2 months, and 650 is not that bad a score. We have an email query coming in next. Raghav has written in, he says he's paying pre-EMI for a construction linked plan. Will he pay more in comparison to EMI? Can he get any tax benefit for paying this pre-EMI? The EMI obviously will only start once construction begins. Does he get a tax benefit?
So, one thing, when the property is under construction, no tax benefit. If at the end of the year the property is still under construction, there is no tax benefit. Whether you pay pre-EMI interest or whether you are paying EMI, it does not matter. Interest payable as on the 31st March, if the property is still under construction, for that year you can't get any tax benefit. That's absolutely clear.
Okay.
And it won't matter whether it is a pre-EMI interest or he has started off the EMI. Because some banks would start off the EMI even before the construction is completed. The second, so this is a misconception people have, that if I start off the EMI, I will get a deduction. And people frequently claim it. And what is happening is that because today 97-98% of the returns, and because most of the returns are accepted as filed, they get the deduction which has been wrongfully claimed, and if at all it ever gets assessed, they can get into trouble. So I think knowing if you claim a wrong deduction, you can get into trouble with the tax authorities. So I think that is the key that viewers must understand.
So when does it actually start? When does your tax deduction actually start? When you move into the house?
Not necessarily. It has to be a house. It has to be what is called a house property. And the definition effectively means that if it is complete, then it can be treated as a house property.
So when the builder hands it over, that's when your deduction starts. Also, what about construction linked plans? Now, he's clearly bought it on a pre-launch basis, but if I go in for a construction linked plan, then can I claim tax deduction?
Absolutely not. As I said, it has got nothing to do with on what basis you are repaying to the bank. You may be repaying on a pre-EMI interest. Even in a construction linked plan, you can pay pre-EMI interest. Some banks allow you to pay an EMI on each of the disbursements that happen. It does not matter. As far as tax is concerned, if on the 31st March of that year, the property is still under construction, no deduction in that year. I think it's as simple as that. If you claim it wrongly, you may get it simply because your returns are accepted as they are filed. But if it is ever opened, you're going to get into trouble.
So that's key takeaway there, and we are on the brink of tax season. So if you all are filing your taxes and if you plan to claim deduction on your home loan, be very clear. You're only eligible for the deduction if the home is constructed. Okay, once the builder hands it over to you, that is when you are actually eligible for tax deduction on your home loan. Till then, you are not eligible. If you've been claiming, the taxman may come knocking and you'll have to probably, foot the bill for that. Okay. He also asked another question. Since he's paying pre-EMI, will he end up paying more money to the bank?
Absolutely. I mean, when you start off the EMI, you start repaying the principal. If you pay just the pre-EMI, you're just paying interest.
You're just paying interest.
So, I mean, if you keep the loan for longer, obviously you'll pay higher interest. So, that's an understanding that the person has. I mean, if he wants to keep the loan for longer period, he'll have to pay higher interest.
So the bank starts actually taking your principal back from your principal repayment only when the EMI starts and not when you're paying your pre-EMI. And also in the first few years of the home loan, you anyway end up paying lesser amount of principal and more of interest, right? Let's move on. Our next question comes in via email. Prashant writes in and he asks, what is the checklist of documents that one needs while applying for a home loan? Good question for a New Year episode, I must say. There'll be a lot of our viewers who are looking to buy homes this year. What documents should they have in place?
So, if I was to just put it in, documents would differ from people who are say salaried and who are say self-employed. But essentially the documents fall into 3 categories.
Okay.
1 is proof of who you are. 2, and who you are includes your proof of identity and where you stay. Second is proof of your income, that you actually make what you say you make. And third is obviously the property papers. Okay. In terms of proof of who you are, PAN is an absolute must for a loan, the PAN card, and that has got a photo, so that's your proof of identity. You will need to give some proof of where you stay. That could be a variety of things. It could be your election card, it could be your passport,
Aadhaar.
It could be Aadhaar, although a lot of lenders don't take Aadhaar as proof of residence.
Okay.
They will take it as proof of identity, but not as proof of residence. So it could be an Aadhaar. Aadhaar is a proof of identity. Also, in some cases, they take it as a proof of residence.
Okay.
So proof of residence and proof of identity. Then comes the fact that you have to prove your income. So that would be different from salaried and self-employed. Salaried people would have Form 16s,
Right.
or they could have filed income tax returns. So that along last 2 years, along with the the computations and your last 2-3 months salary certificate.
Salary certificate, right.
Plus they would ask your last 6 months bank statement in which your salary goes, and they would check off the fact that whatever salary slips you are showing, those credits are reflected in that bank statement. So that's for salaried people.
That's it, yeah.
I think for self-employed people, obviously the proof of
Tax returns, right,
tax returns with detailed computations and bank statements for a much longer period.
Okay.
So maybe 2 years to 3 years.
So that's a whole, that's your laundry list of documents, and of course you also need to check your CIBIL score so you know whether or not you have a good score. If you have a good score, your chances of getting a home loan becomes higher, right? Let's move on. Our final query comes in via email. Sharath writes in. He says that he has a home loan of 31 lakh rupees that was sanctioned June 2009. The duration for this loan is 25 years. His current salary is 9 lakh rupees per annum. He has given his flat out on rent and gets a rent of 1.6 lakh rupees per annum. He wants to save at least 2 to 2.5 lakhs. After family expenses per annum and EMIs are taken care of, he wants to know if it is a good idea to prepay the loan with the above amount. He also plans to do an MBA in the next 3 to 4 years. So there's a whole lot of financial planning going on over there. What should he do?
So
Very quickly, we've got like a minute to answer the question.
So I think a very quick answer for him is that he should go for what is called an overdraft home loan. There is a linked account. Whatever monies you keep parked in that linked account is set off against your loan, and you pay interest only on the balance amount, your EMI therefore consists of more principal and less interest to the extent of money parked in the savings account. You can withdraw it whenever you want. In his case, the beauty is he has surplus today, but he's going to need it after 3-4 years when he's doing his MBA.
Right.
Shift your loan to an overdraft account. Keep all your surpluses parked there. So you are saving interest at the home loan rate. Yet when you go to do an MBA, that money is available for you to pay the EMIs during that period.
So essentially, golden principle financial planning, create a nest egg for the rainy day, right? With that, we are completely out of time on today's show. Harsh, pleasure having you on the show.
It's a real pleasure.
Hope to see more of you in this new year.
Same here.
Thank you so much for coming in. But we'll be back on Monday again to answer all your queries related to buying, selling and investing in property. Do tune in and keep watching Magicbricks Now.